So QRSR results have been mixed. So some companies have shown improvement, some companies still see muted growth, etc. I think it's been uneven, but I think that was expected in the March quarter because there was no recovery actually expected in the March quarter. But I think as, like I said, for consumer durables, as we move forward during this year, given that the base of the last 2, 3 years is so bad, we will see many of these companies report much better numbers as we get into the second and third quarters of the current financial year. So I think, and these have been severe underperformers. So I would say that for contrarian investors, some of these companies could be decent bets.
All right, so that's the take coming in on Jubilant Foodworks. While we are talking about that one, because you saw subdued demand overall, you saw intense competition also from other QSR peers, but Jubilant managed to actually deliver a robust Q4. Sneha is out here to tell us exactly how Jubilant Foodworks sort of performed in the quarter gone by, and what is it that you need to watch out for the company when you go ahead. Sneha?
Well, yes, if you take a look at Jubilant's quarter 4 numbers and you compare them with Bloomberg estimates, then it's a beat coming in. Revenue has gone up by 33.6% on a year-on-year basis, coming in at 2,100 crores. Net profit has come in at 48 crores compared to 207 crores. Now, you have to remember that this time last year there was an exception item of 170 crores, an exception gain. So if you don't account for that, then there's a growth in net profit coming in at 48 crores compared to 37 crores, an uptick of almost 30% on a year-on-year basis. EBITDA has also come in at roughly 389 crore rupees, up roughly 25%. EBITDA margins are slightly under pressure at 18.5% compared to 19.8%, down 130 bips on a year-on-year basis. This is one of the reasons the stock is under pressure today. And secondly, the operating profit is not trickling much into the bottom line. There's not been a big jump on the bottom line. That's also causing some pressure on the stock today. Total store network stands at 3,316, out of which Domino's share is 3,031 and 50 stores were added in quarter 4. Domino's like-for-like growth is 12.1%, delivery like-for-like growth almost 22%. Domino's India revenue is also up by 18.8%. In terms of management guidance, they've said that they will be adding 250 Domino's stores in India and 30 in Turkey. They also see margins going up by 200 bips very soon. And if you take a look at what brokerages are making of these numbers, Goldman Sachs has maintained neutral rating, hiked the target price from 700 to 730 now. Citi has maintained the buy, hiked the target price to 805 from 750 earlier, and Jubilant is their preferred pick in the QSR space. For Nuvama, they've maintained buy rating, hiked the target price to 838 from 776. Antique, on the other hand, maintains a hold rating but has also hiked the target price to 653 rupees from 564 earlier. So bullish calls from brokerages, they've hiked target price, but well, yes, that's a roundup on Jubilant's quarter 4 numbers.